A very good evening to everyone. Once again, welcome back to our live sharing class. Being able to host everyone here is an honor for me. I would like to kindly encourage everyone to remember to put the knowledge that they have learned in my class into practice. Your trading abilities will undoubtedly improve with continued study and practice, which will ultimately result in more profitable trades. Let's strive hard to attain financial freedom, as our ultimate goal is this endeavor. Each of us is here to expand our knowledge and enhance our portfolio. Today, we will continue to talk about candlesticks pattern, which is doji. I think that by sharing all this knowledge with everyone, the majority of our members will find it significant and valuable. Everyone here will be able to read charts with clarity. And if you all understand charts effectively, you will be all able to make more money and save needless losses. Besides of sharing trading techniques, I will also scan for more profitable high quality stocks, share market analysis, and guide everyone in all aspects of trading. So I hope that everyone can be more knowledgeable and profitable. And once again, I would like to say thank you for everyone's support. Okay friends, for today's content, we'll be covering over 4 topics, and also we'll go over the updates of the Asia Pacific region competition standing with everyone. So to start off, let's take a look at the market analysis. Here's a brief review of the overall market trend for this week. Throughout this week, the market has been mainly characterized by fluctuations, with occasionally rebounds. On the last trading day of this week, the index rose and then fell back, which had a certain impact on market settlements. In actuality, while the market trend this week has been mostly characterized by upward fluctuations, it has become increasingly challenging for the ordinary investors to trade. And of course, this may not have a significant impact on our members and friends here. So let's take a closer look at the actual market trend for this week. First off, we will start off with the Nifty index. In summary, the price center of the index has been shifting upwards within this week. But most of the time, the index has been in an oscillating trend. While let's take a look at the situation of the index. From the weekly candlestick chart, it can be seen that the market ended 2 consecutive weeks of decline. And this week marked the largest weekly increase in 2 months. The overall upward trend remained strong. However, in analyzing the market trend, we should not only focus on the optimistic side, but also take note that the index is clearly in a high level oscillation. Observing the candlestick chart of the past 5 weeks, it is evident that the price center has not significantly shifted upwards in the recent 5 weeks. Currently, we can only say that the upward trend still remains strong, but the extent of the increase is basically limited. So, from a technical perspective, the high point of this week is basically on par with the previous high point. Actually, only 2 points higher. This kind of new high can be basically ignored, okay, because it's not very obvious of it. and a small triangular range oscillation is forming. At the same time, we can also notice that the space on the right of the triangle is already very small, indicating that the price will break out in a very short time. Whether it's an upward or downward breakthrough, we expect this to occur within 1 to 2 weeks. Currently, there is already deviation between weekly and daily trend. The upward trend remains strong at the weekly level, and the market is nothing more than oscillating at a high level, which has been our emphasis all along. However, there has been a change at the daily level, especially when the candlestick chart on Friday showing a high and then a drop. In the daily chart, the Friday candlestick closed as a gravestone doji, which often favors the bears when closing at a high level. The daily chart has already shown clear signs of forming a double top. This also can be seen at the weekly level. But the strong upward trend at the weekly level has masked this, unless there is a particularly strong positive news to boost the index to break through upwards. The index will continue to oscillate or more likely decline. Okay, that's all for the Nifty review. Now let's take a look at the Sensex weekly chart. Okay, as for the Sensex, on the daily chart of the Sensex, Friday also saw a high and then a fall, forming a gravestone doji. But the Sensex index did not manage to fully reach the high point of 2 weeks ago. Currently, from the weekly chart of Sensex index, we can also see that the current upward trend is still holding up well. The weekly MA10 is supporting the price all the way up. And although there has been price volatility in the past few weeks, the current MA10 shows no sign of any directional change. And even the moving average shows no signs of flattening. Looking at the weekly MACD indicator, the decline of the past 2 weeks has already shown signs of the fast and slow lines converging. In this situation, unless there is a clear upward breakthrough in the next 1 to 2 weeks, the index will reopen and diverge. Otherwise, there will be a sign of a death cross in the index. And once a death cross occurs, it indicates that the price has adjusted. After all, the indicators of the weekly level have a certain lag. In terms of overall direction, the Sensex index is definitely consistent with the Nifty index. Both at the weekly and daily levels, the trend has already begun to deviate from the weekly perspective. The upward trend still remains strong, and the market is nothing more than oscillating at high levels. But on the daily level, Friday's high and then fall is very obvious. For prices to rise again and break through, there must be a particular strong positive news to boost them. Otherwise, it's still highly probably that there will be oscillation or price pullback in the near future. Okay, that's all for the two indices. Let's take a look at the micro analysis. Next, we'll continue to focus on the macroeconomical data and news. The most significant fundamental information globally this week is the Federal Reserve interest rate decision and the domestic budget plan. As the Federal Reserve currently has no further plans to cut interest rates, Wall Street fell on the day of the announcement. However, in the following 2 trading days, US stocks rebound and continue to reach new highs, while the domestic markets experience a high followed by a decline on Friday. In such a fundamental environment and market trend, it is essential for us to refer to microeconomical data for further analysis of the market. Okay, let's continue to take a look at the news that I prepared, choose. Okay, according to economists surveyed by Reuters, the Reserve Bank of India is expected to keep the key interest rate stable at 6.5% on February the 8th. They anticipate that the central bank will maintain the interest rate unchanged at least until July, unlike some developed market central banks. After rising the repo rate calculative by 250 basis points, far lower than most major counterparts, the Reserve Bank of India has kept the repo rate unchanged since February 2023, as inflation has essentially remains within the bank's target range of 2% to 6%. A few weeks ago, the Governor of Reserve Bank of India, Shaktikanta Das, expressed confidence that the current monetary policy could bring inflation rate back to the medium-term target of 4%. However, due to the inflation nearing the upper limit of the target range, and India still holding the title of the fastest growing major economy, a rate cut is unlikely in the short term. Ajit Rahman, deputy economist of Moody's Analytics, says, "We expect the Reserve Bank of India to keep the interest rate unchanged next week, with overall inflation stabilizing the near 4% target midpoint. A rate cut may only begin in the second half of 2024. India's ability to refrain from cutting interest rate and the slightly delayed rate cut plan compared to other countries mainly depends on the strong development of India's real economy. Rapid economical growth usually accompanies a certain degree of inflation. If a rate cut occurs at this time, it will increase inflation. And of course, I personally believe that the timing of India's rate cut ultimately depends on the inflation data for the second quarter. Okay, let's move on to the next news. The Federal Reserve policymakers are seeking greater confidence in achieving the 2% inflation target. But Friday's data shows that the US job growth and wages growth far exceeded the pre-pandemic levels, which would have the opposite effect. These figures, 353,000 new jobs across sectors and a 4.5% year-on-year increase in an hourly wages have not deterred US central banks officials from their plans to cut interest rate later this year. However, the sustained strength of labor market may take the path to interest rate cuts longer. Revised data released on Friday show that despite significant rate hikes by the Federal Reserve, the US economy added 3.1 million of jobs last year, surpassing the previous estimated of 2.7 million jobs. This week, Federal Reserve Chairman Jerome Powell stated that the labor market does not necessarily have to weaken for progress to make in inflation. According to the Fed's preferred measure, the inflation rate dropped significantly from 5.5% at the beginning of last year to 2.6% by the end of the year. However, sustained significant job growth may intensify that Fed cautious stand on prematurely erasing policy. The central bank kept the benchmark overnight interest rate within 5.25% to 5.5% range since July on Wednesday. Powell stated that this may indicate a peak and interest rates will only be reduced when policymakers are more confident that inflation will continue to decline to 2%. Therefore, investors' expectation of an early rate cut by the Fed to boost the stock market may be disappointed. While a rate cut would certainly benefit stock trading, the current strong performance of the US stock market with the S&P and Dow Jones indices hitting new highs on Friday indicates that a rate cut is just one of several positive factors rather than a necessary condition. Okay, that's all for our micro news and data. Let's move on to our next topic. Okay, Asia Pacific headquarters and block trades. This week, our major profit projects, block trading, okay, has actually went online and actually everyone has traded. Most of our friends have participated in the trading and have made corresponding profits. This coming Monday, we will reap the profits from block trading, including the UC limit stocks. Everyone knows that our asset skill competition is become highly intensive. Despite of all this, my team and I are full of confidence. After all, more and more friends are supporting us, and our profits are also growing in a faster pace. I believe that in the end, we will definitely be able to emerge victory. Okay, let's take a look at the results, current results. Okay, so as of last Friday, 2nd of February, the asset management scale competency result in the three regions are as follow. For India, we are standing at 1.967 billion pound. As for Hong Kong, they are standing at 2.083 billion pound. And for Japan, they are standing at 1.66 billion pound. So this week, the asset management scale in our India region can be said to have achieved a qualitative leap once again. It can be said that the gap between us, India, and Hong Kong region is further narrowing, and our asset management skills is indeed approaching that of the Hong Kong region. This is all thanks to substantial profit from the UC limit trading and block trading this week, as well as the significant profits from the IPO subscription in which we participated. And of course, as we progress, our competitors are also making progress. Personally, I expect that our asset management will make an even greater leap next week. This is because over this weekend, I have successfully negotiated with other institutions and obtained more block trading shares quota. I believe that we will achieve even greater profits for next week. The market this week has shown a slightly stronger fluctuation trend. We will feel lesser money-making opportunities and increase the difficulty for regular trades for ordinary investors, which might resulting in losses for ordinary trades due to the index fluctuations. However, within this week, all our members using asset management accounts for trading have achieved very good profits. Whether it is UC trading, successful IPO listing, or block trading, they have brought us substantial profits. For next week, we are confident that we can once again achieve a huge leap in trading profits. This is because during these negotiations, we have not only obtained more block trading shares quota, but also obtained some stock shares at a higher discount rate, meaning that everyone can achieve greater profits during the trading process. Okay, so it's actually a very good news for everyone of the members. Okay, for this week, the India stock market, as I say, has experienced significant volatility, making trading even more challenging for many investors. However, our team has worked closely together, closely monitoring the market dynamics and increasing our shares of profit through trading in UC limits. Within this week, our combined profit margin from trading in these stocks and block trading has reached an impressive 15.5%. Okay? When factoring in the listing of Additive Learning Technology Limited IPO, the total profit far exceeded 150%. With such a high profit margin, we believe that every friend has the potential to earn significantly. Okay? As a result, our asset management skill in India has risen rapidly, narrowing the gap between Hong Kong and us at a very fast pace. At Pantheon, we are all committed to provide our members with better investment opportunities. Our analyst team conducts in-depth research into market trends, not only focusing on stock prices fluctuation, but also deriving into various fundamental factors to ensure our trading decisions are based on comprehensive information. This comprehensive analysis help us better grasp the market pulse and seize opportunities presented by the stock price fluctuations. And more importantly, we always adhere to prudent risk management principles. While pursuing profits, we focus on protecting investment capital. It is for the reason that we have repeatedly negotiated for more risk-free trading shares with other institutional units in the market, such as trading shares in using limit stocks, block trading shares, and even IPO subscription shares. By engaging in these types of trading, we can effectively eliminate risks, leaving only secure profits. This cautious and wise investment strategy has enabled us to navigate market volatility with confidence and achieve significant profits. So in future, we will continue to serve our members with a professional and transparent trading philosophy, helping you to navigate the stock market steadily and create a better investment future together. Okay. Block trade. Currently, we have started to engage in zero risk high yield tradings, which is block trading. We believe that vast majority of friends have already participated in trading and have made profit from it. As block trading is basically zero risk, high yield, and is not only popular in the market but also eagerly sought by a lot of our members. Currently, some members have given me a feedback that they have not been able to buy the corresponding shares. So there is some good news that I would like to share with everyone. This weekend, I have also negotiated a significant amount of shares for next week block trading. I have reached further cooperation opportunities with institutions such as HRTI Private Limited and Graviton Research Capital. It is now basically confirmed that we have 4 opportunities for block trading next week. And there will even be discounted shares available, which means that everyone can earn more profits next week when engaging in block trading. I can tell everyone that there will be an opportunity for block trading tomorrow. Friends who needs or want to participate can contact my assistant in advance for registration. One thing that I need to inform everyone about is that we all know that the purpose of our Pantron itself is to serve high net worth clients. Currently, the asset management account is open to all friends and members, mainly to expand market shares and as a way of giving back to everyone who supported us along the way. However, currently we have too many members and some friends have reported that they cannot buy the corresponding shares for block trading. Therefore, for those participating in block trading, there will be a certain threshold condition in the near future. And you can inquire about the specific details with my assistant. As for tomorrow block trading, everyone still can buy without any conditions. Apart from block trading of stocks for tomorrow, trading of using limit stocks will continue as usual. That's all regarding about this issue today. Let's move on to the segment of technical learning. Okay, let's move on to classical tactics. As I mentioned about doji candlesticks, right? Okay. Next, we'll study about some trading techniques. Okay, one of it is called the doji candlesticks. So in our last session, we together learned some classic candlestick strategies, which can be considered as a complete trading system in actual trading. As long as we continue to refine our skill in actual trading, keep what is useful to us, discard what is not, and eventually form our own trading system. Only in this way can we achieve stable and long-term profitability in the stock market. Today, we will continue to explain some classic strategies about candlesticks patterns, and I hope everyone will continue to study diligently. So today, we will touch on a candlestick pattern called doji. In fact, this pattern looks simple, and you may often see this candlestick, but have you seriously and deeply studied the corresponding strategies? I believe many friends have not. So without further ado, let me share with you our strategy for capturing large gains, the doji style strategy. Okay, of course, we can't learn all the doji strategies in just one day. So let's learn as much as we can today. Okay. Classification of doji. In all candlestick charts, the doji is relatively common and representative of the candlestick pattern that can reflect a lot of market informations. For the sake of easy learning, I have temporarily classified the doji into simple categories. Okay, into category 1, 2, and 3. Okay. Of course, there are other ways to classify in the market. There's many ways, but we will not go into details for now. If everyone can understand the types I share today, they will roughly have a clear understanding of the use of the doji. Okay, for the first type, I call it small doji type. Okay, you can take a look. I call it this one, small doji type. The upper and lower shadow. Okay, what is called upper and lower shadow? Meaning this is the upper and this is the lower. This is upper and lower. Okay. The upper and lower shadows of the doji are relatively short and even, and the amplitude of the high and low points is not too large. If it appears in a rising market or just at the beginning of a correction period, it may continue to consolidate and fluctuate. Similarly to the long doji, okay, if it appears at the high point of a rising market or a low point of a declining market, it also means that the bull bear game is coming to an end and the market will reverse. Okay. Number two, which is this one. Call it the relatively large doji. Okay, large doji. This type of doji usually has longer upper and lower shadow, indicating that the bull and bear forces are evenly matched. This type of doji appears at a high point or low point. It means that the trend may change at any time. Okay. For the third kind of doji, doji with relatively long upper or lower shadow. Okay, this type of doji usually has either a longer upper shadow or long lower shadow. However, unlike the previous type, this doji rarely appears during a period of consolidation and fluctuation, and more often appears at the top or the bottom of the market, indicating a strong intention for a market reversal. Okay, let's move on. Okay, we are now going to study the significance of the doji in a different market position. Okay, before discussing this issue, let's first look at how to tell the difference meaning of the longer upper and lower shadows of a doji. In all doji candlestick charts, the longer the upper shadow of a doji means heavier selling pressure. Okay, indicating that the bears have suppressed the bulls. Okay, conversely, the lower shadow, the more sufficient the buying pressure, indicating a stronger bullish force, which may lead to a rebound at any time. Of course, for a more accurate judgment, it is necessary to analyze its position. In different position of all doji candlesticks chart, their representations are all different. I roughly divide them into 3 different situations, and we will look at them separately. Okay, first, let's take a look at the first scenario, which is what does it mean when a doji appears in the low price area. Okay, when the doji appears in a low price zone. This situation often occurs when the price has experienced a long period of significant decline, and a doji appears after a gap, preferably accompanied by increased trading volume. So at this time, it often signifies a reversal of a long and short forces evolving from the dominance of the short side to a balanced situation between both sides. Okay, the market is expected to successfully establish a short-term bottom at this time. If a large bullish candle appears with increased volume the next day, the bullish momentum will be established and the price will rise rapidly. The appearance of this doji indicates that the upcoming market is most likely to start a major rally. In actual market analysis and predictions, the success rate is often higher if it can be combined with other indicators for comprehensive analysis. Okay, let's interpret with a chart. Okay, as shown in the figure, after a round of decline, okay, over here, it is important to note that before the appearance of the doji, the decline was significant and lasted for a long time. At this point, a doji appeared, followed by a significant increase in a candlestick chart, which then led to a very obvious upward trend. There are 2 points to note here. Point number 1, before the appearance of the doji, in a decline trend with larger decline and with a long duration, this will be better. Okay, so long decline. Okay. Point number 2, on the second trading day after the appearance of the doji, it is best to have a significant increase in the candlestick chart for confirmation. Okay, you can see there's a doji here. On the next day, it's an increase. Okay, this is for confirmation. Only after confirming these 2 criteria, what's follow is often a good uptrend. However, it is important to note that there is no method 100% successful. Okay, everything has its good and bad. Okay, it's not 100%. In actual market analysis and prediction, if other indicators can be combined and for comprehensive analysis, the success rate is often higher. Okay. Okay, let's take a look at scenario 2, which is when the doji appears during the process of rising, okay, in the upward trend. At this point, the upward movement is particularly large from the starting point of the rise, but it may be a temporary high point. If a gap doji appeared at this time, accompanied by an increase in trading volume, it indicates that there is a divergence in the bullish and bearish force. Some of the profit-taking position are starting to take their profit. So they are starting to close their position. Okay. And the subsequent process of the bull and bear game will become more intense. At the same time, for large institutions and funds, they will take this advantage. Okay, this advantage of this opportunity to suppress the stock price, leading to some psychologically weak and indecisive investors selling stocks out of panic because they got scared. Okay, once their psychological is moved and they are panic, they will sell with their stocks. These large institutions often take the opportunity to absorb all the stocks at a lower price. Okay, usually when this kind of doji appears, it means that the upcoming market will face a volatile decline. But after the stock price completes the volatile decline, it has the ability to continue to rise. Okay, let's use graphic examples, okay, to help everyone to understand. As shown in the chart, according to Dow theory, this is a clear upward trend, okay, with its high and lows gradually rising. In this observed upward trend, the market is actually running in several stages, each of which is a round of up and down. Okay, it's up, down, and down. Okay, so on and so forth. You can notice the several circle area, which are all the periodic high. All these circle area are the periodic high. Okay, these 4 points. The appearance of these highs is accompanied by the appearance of a doji. Okay. Now, can everyone clearly understand the significance of the appearance of a doji in an upward process? Okay, the upward trend. This type of doji actually has a very significant guiding significance for practical trading. If we sell stocks after each appearance of a doji and then wait for a new buying opportunity, can we greatly increase our capital utilization rate and at the same time increase our profit? Of course, this method is indeed very good, but when everyone use it, then they need to study and practice many times. Okay, need to practice many times. It is not something that can be proficiently applied simply by learning it today. You learn today, tomorrow you still got to learn. Okay, you can't learn today and use it and know everything by tomorrow. Okay, as I say, practice makes perfect. Okay, next, let's take a look at the third scenario, which is when a doji appears, okay, in a high price zone. How will the market behave? Usually, when the market has experienced a long period of significant rise and reaches a relative high position, please take note that this high position does not refer to the absolute value of the stock price, but rather to the relative position or magnitude of the rise. Okay? If a doji appears at this time, its analytical significance is opposite to when it appears in the low price area. It indicates that the bullish force is beginning to weaken. Okay? Beginning to weaken. And signals the start of a bearish counterattack. Meaning the bearish are trying to take over. Okay? When a doji appears in a high price area, it often indicates that the price has reached its peak and will soon experience a significant decline. Furthermore, please note that the concept of high and low here does not have a fixed standard, okay? Nor can it have a quantitative standard. It requires more qualitative analysis, so everyone should pay attention to this when studying. Okay? Don't mix them up. Okay? Okay, let's use another graph for example. As shown in the figure, everyone pay attention to the area circled in the graph. Okay, which is the center, the yellow circle. In the three candlestick pattern, there is a doji, right? After the appearance of this doji, a significant downtrend unfold. So, were there any doji before this? If you guys can see, yes, there is. Okay, but why didn't a larger downtrend occur after a previous doji, while a significant downtrend unfold after the circle doji appeared? Okay, why in front doesn't start to fall? Why must be this doji that we start? Right? In fact, everyone can pay attention to a second candlestick pattern after the appearance of the previous doji, which can help us to further analyze and judge. Okay. Therefore, when a doji appears at a high point of a strong upward trend, it often a signal of a peak, and a significant downturn may follow. At such times, we still need to use the combination of candlesticks pattern as well as moving average, trend lines, or other indicators to make a comprehensive judgment and reduce our holdings or exit the market to avoid giving back too much of our profits. Okay? Okay, next. We continue to share the third type of content about the doji candlestick. Okay? Which is about multi-doji candlestick pattern. Multiple doji candlesticks. Okay? In actual market trends, we often find the situation where multiple doji candlesticks appear consecutively. In such cases, how should we respond? What kind of strategy should we adopt? Okay, firstly, this type is suitable for two types of market condition. The first is stable market, which means that after a round of adjustment, if multiple doji candlesticks appear consecutively, it often indicates that the adjustment phase is basically over and the market is beginning to stable. The second is an overall rebound market, which means that before appearance of multiple doji candlesticks, the market has already experienced a substantial decline, and when multiple doji candlesticks appear, it often indicates that the price is about to start to rebound. Okay? Furthermore, which stocks does this situation apply to? Similarly, are categorized into two types of. Firstly, stocks for oversold rebound, which is similar to the oversold rebound market mentioned earlier. Expect that one is that the micro level and other is specific to individual stocks. Secondly, it often represents stocks that have just started to rise. Okay? So what kind of morphological figures will appear when this multiple doji appears? Multiple doji has a variation of the morning star, but the power they form is often much greater than that of a morning star. As for the morning star, I have shared it with everyone before. In fact, in terms of technical analysis, whether it's candlestick chart or other technical indicators, they are often interrelated. For example, as we have discussed before, the term divergence is used in multiple indicators, and its meaning is often similar. The doji pattern is similar in this way, like the multi-doji mentioned now. They have similarities and differences with the morning star. When the daily line shows multiple doji, the trading volume shrinks and is neatly arranged, while the weekly line does not emphasize neat trading volume. Okay? Okay, let's take a look at another graph. Looking at the current chart, okay, as shown in the figure, during the period of stock price oscillation adjustment, the main force deliberately suppressed the price, clearing out ordinary investors or those with weak determination in order to collect more low price stocks. Then, okay, the point that I marked 1 in the chart, multiple doji lines appeared. Okay, over here. With shrinking volume during this period, it can also be seen that in the subsequent market, after the stock volume rose for a period of time, there was another shrinking volume retracement at the position mark number 2. Okay, which is point number 2 here. When another doji line appeared, the market began to rise with increased volume, thus initiating a very substantial upward trend. Okay? If one can capture such trading opportunities using this technical pattern, the result of profits can be very substantial. Okay? So, doji candlesticks, important points to note. Okay? It can be made very clear to everyone that if can proficiently use methods such as the multi-doji during the trading process, it is definitely possible to increase the trading success rate and expand the profit margin. However, are there any points to note about this period? It is very obvious that there are. When using this method, the following points should be noted. Point number 1, the more candlesticks in the doji pattern, the better it is. 3 candlesticks are optimal, and they have the greatest power. Okay. Point number 2, in terms of trading volume, in the daily chart, the trading volume accompanying the multi-doji candlestick pattern should be significantly shrinking. Okay. But the weekly chart does not emphasize the trading volume. Okay. For point number 3, after the multi-doji appeared, it does not necessarily mean that the stock will rise very well. It may be lukewarm, okay, for a while, which is related to the nature of the stock. Active stocks often have a better increase after this pattern appear. Therefore, it emphasizes that before this pattern appeared, there has been a decent increase. There are recent large bullish candlesticks, and there are multiple bullish moving averages. Friends, please note that the above is only my personal summary of experience for everyone to refer to and learn from it. It cannot be said that what I share is definitely the truth. Everyone can summarize their own method, okay, in the process of learning and practical applications. Only when summarize your own methods, it is the best method. Okay? So friends, we come to the end of my live sharing class for today. Hope that everyone are able to learn something. And thank you very much for joining my class and giving me your full support. We'll continue our live class on this coming Tuesday, 6th of February 2024 at 8 p.m. I hope to see everyone here again. And thank you once again and have a great night.